Today I will show you my ultimate VWAP QQE strategy for trading stocks that's almost never wrong when it comes to trade entries. If used correctly, this method can double, triple, or even quadruple the size of your account in a matter of weeks. And to prove that this is not all talk, I will backtest this strategy 100 times with an initial account size set at $1,000. And I'll be using a 1-to-3 risk to reward ratio. So make sure you stay focused and learn this amazing technique that you will not find anywhere else. Like, subscribe, and turn on those notifications so you don't miss out. Now without further ado, let's get into it. So first of all, you need to head over to TradingView.com and set your time frame to 5 minutes. Next, navigate up to your indicators tab, and now you're going to need to add 3 free TradingView indicators. So for the first indicator, search for volume weighted average price and select the indicator here you see under technicals. The volume weighted average price, or VWAP, is a technical analysis indicator used on an intraday chart that resets at the start of every new trading session. It's a trading benchmark that represents the average price a security has traded at throughout the day, based on both volume and price. VWAP is important because it provides traders with pricing insight into both the trend and the value of a security. The indicator consists of a baseline, which is this blue line, and then we've also got our upper and lower bands. These bands can be quite useful, but for this strategy I'm about to show you, we're only going to need our VWAP. So in the style section, we're going to be removing our upper band, our lower band, and also our bands fill. Okay, now let's add our second indicator to the chart. For that, you need to type in QQE signals, which is this one by Colin MCK. This indicator is much easier to read compared to a regular QQE because it prints long and short signals directly on your chart. So the next step will be to access the indicator settings, and in the input section, we're going to be changing the RSI length from 14 to 20, our RSI smoothing from 5 to 10, and our QQE factor from 4.238 to 3. These are currently the best settings that I have found for this indicator. Finally, let's install our third and final indicator to the chart, and for that you simply need to type in auto trendline, which is this one by Doji Emoji. This indicator will basically help us identify lower highs and higher lows in the market. By the way, its settings is on default. Okay, the setup is ready. Now let's learn how we should place buy and sell orders with this strategy. So for a valid long entry, you need to have the following conditions met. First, the price action must be moving above our VWAP, and the line also must be pointing upwards. Second, the market needs to make a pullback into our VWAP. During the pullback, the candlestick can either touch the line or get really close to it. Third, the price action must be making higher lows. This is an ultimate confirmation of an uptrend. And finally, the QQE indicator must print a new long signal. A buy order will be placed at the close of our trigger candlestick. The stop loss is going to be set slightly below our most recent swing low, and the take profit target will be set at 3 times the risk. If the market moves in your favor and reaches the risk to reward ratio of 1-to-1, your stop loss is then going to be moved to the break even. So as we can see here, we moved to a 1-to-1 risk to reward ratio. We're then moving our stop loss to our entry level. When the price action reaches the risk to reward ratio of 2-to-1, you're then going to set your stop loss at 1-to-1.5 risk to reward. By doing this, you're maximizing the profits and minimizing your risk. On this particular trade, we can see that the market completely hit our targets. Here's another example for a long trade. We see that the market is moving above our VWAP and the line is pointing upwards. We then had a pullback into our VWAP. Then after our pullback, the QQE issued our long signal. Then our last condition is to have our price action making higher lows. So once all of these conditions are met, we can safely enter a long position on the close of our trigger candlestick. We're then bringing our stop loss down towards our most recent swing low, and we're going to be using the same money management technique. In this example, we actually managed to hit all of our take profit targets again. Alright, now let's learn the short positions. So first, the price action must be moving below our VWAP, and the VWAP must be pointing in a downwards direction. The market then must form a pullback. During the pullback, the candlestick can either touch the line or get really close to it. If the price action crosses and closes above the VWAP, the pullback automatically becomes invalid. The next condition is to have lower highs being formed in the market. And the final condition is to have our QQE print a short signal. So once we have all of these conditions met, we can safely enter a short position on the close of our trigger candlestick. Bring your stop loss there just up above your most recent swing high, and we're going to be targeting 3 times the risk. But remember, as soon as the price action reaches a risk to reward ratio of 1:1, you're going to be moving your stop loss to break even. Once the price action reaches a 1:2 risk to reward, the stop loss is going to be moved to 1.5 risk to reward. And when the market reaches your risk to reward ratio of 1:3, your trade is automatically closed. Here is another sell example. We can see that all of the conditions are met. The price action is moving below our VWAP. The VWAP line is also pointing downwards. The market is also making lower highs. We then had a valid pullback, and our QQE printed a short signal shortly after. A few candlesticks later, the market reached a risk to reward ratio of 1:2. So we then set our stop loss to 1 to 1.5 risk to reward ratio. The market then successfully reached our stop loss, and we closed this trade in some nice profits. The reason that we move our stop loss to break even as soon as the price action reaches a risk to reward of 1:1 is to simply protect ourselves from taking unnecessary losing trades. Just take a look at these 2 examples. If we had not moved our stop losses to break even, these trades could have easily resulted in losses. Okay traders, I hope you have understood the rules for this strategy. Now let's move on to the backtesting to find out how well it works in different market conditions. So the backtesting is finally finished and the results look really promising. The win rate for this strategy is 78%, and because our risk to reward ratio was 1:3, the strategy actually managed to increase our account size by 1700%. The profit factor is 7.41, and we had 13 consecutive wins against 4 consecutive losses. We also managed to find those 100 setups within 5 months. So definitely give this strategy a try, but make sure you forward test it with paper money before trading it live. If you have any questions, please ask them down below in the comment section. If you did enjoy, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.